Welcome to Capitalize Your Finances, the podcast that's your ultimate guide to mastering personal finances and unlocking the secrets of entrepreneurship. Each week, we dive into the world of personal finance and business development and have fascinating conversations with industry experts, seasoned entrepreneurs, and thought leaders who share their insights, strategies, and stories to help you get ahead in life. Whether you're a seasoned entrepreneur looking to scale your business or someone just starting out on your financial path, this podcast is your go-to resource for inspiration and actionable insights.
Welcome back to Capitalize Your Finances. As always, I'm your host, Christopher Panayiotou, certified financial planning professional, the Cap and Capitalize. And on today's episode, we are going to get into how to buy a home. But before we get into the crux of the matter of today's episode, the free advice for the week. When in doubt, opt for delayed gratification. Too many people live for the now, and I'm not against enjoying the present time. In fact, I will be the first to admit I do a really bad job at that, and I need to do better, and I've gotten a lot better at it. However, people are living longer, and the cost of things do in fact increase over time. So all of which to say, tone it down and get really serious on the future. Your future self will thank you. Now let's get into the 10 steps you will need to take in order to buy a home and successfully do so at that. Because just because you're able to buy a home does not mean you do it in a successful manner. I'm going to explain what that means as we go on in today's episode. So step number 1, prepare financially. What does that mean? You're going to need to check your credit score. Aim for a strong score. Ideally, you want to get to 700 plus for a really good rate. Obviously, the higher, the better. I think once you get above 700, it's not going to matter a whole heck of a lot. Sure, you may split your hairs if you get above 800. The maximum is 850. But again, once you get to 700 or above, you're looking pretty steady. You're going to need to save for your down payment. Generally speaking, that means anywhere from 3 to 20% of the purchase price, depending on the loan type. I'm going to tell you, you're going to want to get to that 20% or more, but for sure 20% is a minimum because you want to avoid the PMI, the private mortgage insurance. Basically, what that means is if you go and take out a loan on a home, anything below 20% in terms of the equity, with exceptions of VA if you're in the military, but that's a whole nother ballgame. The insurance or the mortgage company is looking at it going, okay, in the bank, there's not enough equity or cushion in this in the home, so we basically need to make up that difference. In PMI, it's just annoying, so you want to avoid that. Also, even aside from PMI, it's just nice to have cushion. I mean, if you buy a home and let's say you had 35% down, I'm not recommending you need to do this or not, but let's say you bought it, you had 35% equity, and for whatever reason, there is a housing decrease in value. Well, you still have enough cushion. You never want to be underwater with your home or any asset for that matter. You're also going to want to budget for closing costs. Generally, that's 2 to 5% of the home purchase price, and that covers lending fees, appraisals, inspection, title, you name it. And lastly, you want to build a reserve fund. And yes, you could say that's an emergency fund, and there's a lot of overlap, but lenders like to see that you can handle the future expenses beyond the purchase. We've said this ad nauseum in the past. You want to have 3 to 6 months of emergency fund off to the side, period. But as far as a down payment, if you need 3 months worth of emergency fund, you may need 4 or even 5 because whether you like it or not, home ownership has a ton of surprises, including emergency expenses. Number 2, get pre-approved for a mortgage. Shop around for lenders to compare interest rates and terms. Ideally, you want to have a quality mortgage broker in your back pocket where he or she can shop out accordingly and get you the best rate independent from any given outlet. And a pre-approval letter strengthens your offer when you're finding a home. And you're going to want to determine what loan type works best for you, whether it's conventional, FHA, VA, or USDA. And again, your mortgage broker is going to be the person that is going to walk you through this process. And if you need a quality mortgage broker, let me know and I'll refer you one. Or you can go to our business website. Number 3, define what you want. Now, obviously, you want like a home or a condo or a townhouse. Like, I get that, but get a little bit more granular. Location. So if you're looking at school districts, the commutes from your place of work, the safety of your place, the lifestyle of your community. You're going to want to look at the type of home. Again, single family, condo, townhouse, new build, a fixer upper. When in doubt, pay up for quality. It's just a little free tidbit. You're also going to want to weigh the must-haves versus nice-to-haves. So bathrooms, bedrooms, yard size, things of that nature. And then you're going to want to budget your comfort zone. Just because you're approved for a certain amount does not mean you should spend everything up to that point. Number 4, find a real estate agent. Look for someone with experience in your target area. Your agents help with property searches, negotiations, paperwork, all the fun stuff you don't want to deal with. And in order to find a quality real estate agent, you're going to want to ask for referrals and you're going to want to check reviews. Number 5, start house hunting. You're going to want to attend open houses. You're going to want to schedule tours. You're going to want to explore the neighborhoods that you're in, maybe even after hours. Don't be like a creep about it, but maybe you're looking at a really nice house, but in the evenings, your neighbors live it up, or maybe it's a really rowdy community. That's not saying that it's a bad community, but what if you want to have a more low-key lifestyle? Well, you won't see that during the day, but you'll see it at night. Take notes, compare carefully. Do not rush this process. Buying a home for 99% of people is the largest expense that they are ever going to have to incur. And emotionally, because of that, it is a huge drain. Speaking of that, you're going to want to balance your emotion with logic. Falling in love with a house, great. That is the American dream, but that can sometimes blind you to the big issues. So have a ton of quality people in your back pocket that can give you viewpoints in tips or feedback that your rose-colored glasses you're wearing, you're otherwise completely blind to. So with that, we're going to take a quick commercial break. And when we come back, we're going to keep going on the 10 ways on how you can look at buying a home in the best way possible. So don't go anywhere. Stick around.
Are you ready to transform the way you approach sales? This episode is sponsored by the second book in the Capitalize series, Capitalize Your Sales, the all-in-one sales framework that saves you from ever struggling again and teaches you how to sell with sincerity, which dives deep into the art and science of driving sustainable growth. Packed with strategies that go beyond surface-level techniques, this book will help you understand what it takes to truly connect with clients, build long-term relationships, and close deals. Whether you're looking to fine-tune your sales craft or break through to the next level, Capitalize Your Sales offers a roadmap to success designed for today's fast-paced business world. Head on over to your favorite bookstore, order today, and start capitalizing your sales immediately. And now, back to the episode.
Welcome back from the commercial break. We're going to get into number 6 in terms of how to buy a home successfully, which is make an offer. Your agent is going to help you decide on a competitive offer based on your market conditions. You're going to want to negotiate on price, closing costs, repairs, all that fun stuff. Once it's accepted, you will sign your purchase agreement. Number 7, get a home inspection and appraisal ASAP. The inspection, that's going to uncover structural, electrical, plumbing, safety issues that you're going to need to fix. And that could help with the negotiation. And as far as the appraisal goes, that ensures the home is worth what the bank is actually lending. And again, use these findings to negotiate repairs or credits if need be. Number 8, secure financing. And this is where you finalize your mortgage with your lender. And again, your mortgage broker, if he or she is quality, is going to be the go-to that will help you get matched with the best lender. Now, you're going to need to provide necessary documents. What does that mean? You're going to need pay stubs. You're going to need tax returns. You're going to need bank statements. Your mortgage broker will guide you through a lot of these things, and there may be some ancillary things above and beyond, but those are going to be the big three that you're going to need. You're also, during the step, going to lock in your interest rate. You will be able to choose, generally speaking, either a fixed rate or a floating rate. Now, due to compliance in my regulation, I can't directly say what you should or shouldn't do. However, reading between the lines, I'm pretty, it's a bad pun, so just roll your eyes, fixed on a choice in my mind. That's all I'm going to say. Roll your eyes, get it out of the way, but you know where I go with that. Number 9, close on the home. Not rocket science. You're going to review the closing disclosures, and that's going to list all the the final financial costs associated with the home. You're going to want to do a final walkthrough to ensure the property is in the agreed condition. And that's where, after all that's said and done, you sign your documents, you pay your closing costs, and you get the keys. But it's not done yet. The 10th and final thing I want you to be aware of when you're buying a home: move in and maintain. Last part is very key. You're going to want to set up your utilities, your insurance, and you're going to want to address any changes that have been made to the home immediately. And you want to automate those payments as soon as possible. You want to budget for ongoing maintenance, and that can be a moving target, obviously, because we don't really know what's going to happen to your home between now and Judgment Day. But a good rule of thumb is to budget anywhere between 1% to 2% of the home value as ongoing maintenance on an annual basis. And you could add that onto your emergency fund. So if you have 3 months worth of emergency fund plus 1% to 2% of your home value annually, that's great. For some of you, you may be able to just blend that into your emergency fund. It's really up to you, but just know that your home is going to need some tender love and care. The best part of home ownership is you build equity over time. You're going to be paying this mortgage down. Hopefully your home will be growing over time. More likely than not, if you live in it long enough, it probably will. Fun little fact, since I think it was 1929 through 2019, the housing index grows at about 4% a year. So I'm not guaranteeing that, but that's what you should estimate in the long run, especially if you're going to live in your home throughout the length of your mortgage. And if you take out a 30-year mortgage over 30 years, you should see some growth. I mean, even if people bought right before the Great Recession in 2007 through 9, and really the real estate was 2009 through 2012, even if you bought right before that, in the year of 2025, you've probably made some money on your home. And then lastly, over time, and this one's really important, track where interest rates are, as refinancing could be a strategic option over time. Very similar to earlier, due to my regulation and compliance, I'm pretty handcuffed on what I can, and in this case, really can't say. And I can't specifically get into strategies. I wish I could on the show on how to refinance. So all I'm merely going to state is it's worth your time knowing when or if refinancing is right for you. And stay in touch with your mortgage broker. Again, I cannot stress it enough. Yes, having a quality real estate agent is paramount to buying or selling a home. But where you make your money in the long run is the mortgage side of things. And having that mortgage broker on speed dial is going to be immensely valuable. And if they're really good at what they do, they're going to call you when interest rates move up or down. And over time, that could free up an immense amount of cash flow. And it could even add equity to your overall life. So that does it for today's episode on how to buy a home. At this point, you all know how to get a hold of me. As always, I'm your host, Chris Panayiotou, certified financial planning professional, The Cap and Capitalize. And until next time, keep capitalizing. Take care. As always, thank you for joining me today. If you have questions about today's episode or any personal finance questions, please reach out to me at Cap and Capitalize on Instagram, Chris at capitalizeyourfinances.com, or via our website, capitalizepodcast.com. If you want more Capitalize Your Finances content, head on over to capitalizepodcast.com and check out our blog, free resources, book, and online course. As always, I'm your host, Chris Paniotu, Certified Financial Planning Professional, The Cap and Capitalize. And until next time, keep capitalizing.
Content in this material is for general information only and not intended to provide specific advice or recommendations for any individual. These materials are provided for general information and educational purposes based upon publicly available information from sources believed to be reliable. The information in these materials may change at any time and without notice, and its accuracy cannot be guaranteed. There is no guarantee that any investment strategy will meet its stated objective. All investments involve risk, including potential loss of principal. Investments in real estate may be subject to a higher degree of market risk because of concentration in a specific industry, sector, or geographical sector. Other risks can include, but are not limited to, declines in the value of real estate, potential illiquidity, risks related to general and economic conditions, stage of development, and defaults by borrower. Christopher Paniotu is a registered representative with and securities and advisory services offered through LPL Financial, a registered investment advisor, member FINRA SIPC. Capitalize Your Finances LLC is a separate entity from LPL Financial. Capitalize Your Finances is not registered as a broker-dealer or investment advisor. CRPS conferred by College for Financial Planning.